Hello and welcome to 9 to 5 Investing. This is a YouTube channel where Blake, an accounting professional who has been studying and investing in the stock market since he was 17 years old, discusses stocks, predominantly fundamental analysis, and personal finance.
I'm really curious, haven't checked in maybe like a couple weeks. Really curious what Tesla's share price is these days. Almost $500? Guys, this is insane. Today, I'm gonna be going over why Tesla stock could be at this high of a price this quickly and what you can do to profit from it.
If you enjoyed this video, please subscribe and smash that like button.
Hey guys, my name is Blake and welcome to my YouTube channel, 9 to 5 Investing. Today we're going to be talking about a very interesting topic. I don't know if you've heard of Tesla. Most people have at this point. But Tesla is basically the leader in electric vehicles and automated driving in those electric vehicles. And Tesla has been undergoing a massive short squeeze since about June of 2019. So if you're looking to profit from this type of situation, I'm gonna just kind of go into my thoughts and opinions on that. And please watch until the very end of the video because I will give you one invaluable tip that a lot of people have to learn the hard way. It could save you a lot of money when you're trying to profit from a situation like this. So stay tuned guys, let's get into it. So before we can get into what a short squeeze is, we need to understand the short squeeze is what's happening to Tesla stock right now. We need to understand what exactly it means to short a stock. So when you short a stock, you're calling up your broker and you're saying, hey, let me borrow some Tesla shares or whatever shares it might be. And I mean, let's be real guys, we actually just order online these days. No one uses phone calls to place trades, but that's beside the point. So let's say, for example, I want to short Tesla at $400 and I place an online order to short Tesla shares at $400. Tesla shares go down to $275. I get to keep that $125 difference if I basically decide to cover at $275. And what covering basically means is you're buying back those shares at the current market price and returning them to your broker. Now, what's happening, and this has been happening all the way since basically when Tesla stock was 180, is people tried to short Tesla stock and it just keeps going up, 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 and who knows when it'll stop. And here's the thing. So let's say you shorted Tesla stock at $400, right? Or just anyone shorted Tesla at $400. Basically now Tesla's 480, so they owe their broker these higher priced Tesla shares. Doesn't matter what the price action is, you're always having to give those shares back to your broker eventually. And meanwhile, you're actually paying interest on them too, but so that's a little bit more pressure. But basically, the crazy thing about shorting is that your loss is literally unlimited. So Tesla could go to $10,000 a share if you shorted it at 180, for example. Let's just do a little math. So we're basically gonna do $10,000 a share. And I mean, guys, this is obviously hypothetical. I'm not saying Tesla is gonna go to $10,000 a share, but you never know, it's possible. But anyway, $10,000 a share, and you short it at 180. That means you owe 55 times the value that you originally paid for the stock. Guys, that's crazy. The risk there is insane. Whenever you buy a stock as an investment, the worst that can happen is that you lose your full investment. With shorting, it's literally unlimited how much money you can lose. So that's shorting. So hopefully now we have a better understanding of what it means to short a stock. This is absolutely essential to understanding what a short squeeze actually is. So what is a short squeeze? Well, basically a short squeeze, you gotta have two conditions really. You gotta have one, the stock has a high percentage of the float, which basically the float is just the shares that me or you could trade. Have a high percentage of the float that is being shorted, okay? And then you also need to have a piece of good news. And what happened was basically CEO Elon Musk came out and said, hey, we're gonna have record production numbers, we're gonna have record delivery numbers, and this of course sent the stock flying. And what happens is you have all these shorts that occupy a high percentage of the stock's float panicking because they're like, oh my gosh, my loss is unlimited. What am I gonna have to pay back to my broker to cover this? So you have tons of them just covering, and that pushes the price up even more, guys, because here's what's happening. They're buying back the stock at prices that they could have never imagined. Because if they're shorting a stock basically at a lower price, then they're expecting it to go down. They're not expecting it to go up. So it goes up, they just get absolutely trashed. And that pushes the price up more and more and more. Imagine being a Tesla short at $180 and you're gonna have to cover it around 500 if you're getting a little bit too nervous. And that would mean that you're already down 2.7 times your investment. This is playing with fire, guys. This is playing with fire. So that's a short squeeze. As people trying to make money in the market, we now have to look at Tesla at these $500 levels and ask ourselves, is it worth a short now? And to answer this question, we can kind of look at some of their competitors and see what they're worth and the sales that they have. And so basically, if you look at General Motors and Fiat Chrysler, you combine their market caps, you are actually still not at Tesla's market cap. And Tesla actually has a fraction of the sales of either of these companies. So I actually made a graphic that we can take a look at just to put a little bit of that into perspective. So just as I had stated before, I made a couple graphs to just illustrate the argument for a short seller on Tesla. And it kind of does make sense in a lot of ways. Let's go through it. So cars Tesla sold in 2019 versus their competitors. And these are just a couple competitors. They have a lot more competitors than this. But first we have Fiat Chrysler, ticker symbol FCAU, 2.2 million. General Motors, 2.9 million. Tesla, 367,500. So obviously these two competitors are dancing circles around Tesla in terms of number of cars sold. But here's the really big surprise, guys. So Fiat Chrysler, $28 billion market cap. General Motors, $49.51 billion market cap. Tesla, $86.18 billion market cap. Tesla is actually worth more than Fiat Chrysler and General Motors combined, yet it sells a fraction of the cars. So right here, this is a graph that I made that I think just perfectly shows what a short squeeze is. And so the way that I'm doing that is I'm showing you Tesla's share price, and then I'm showing you the short interest. And basically the short interest is just the number of shares that were shorted at any given time divided by the outstanding shares. And at the height here, we have 25%. This was before that good news came out about record production levels. And oddly enough, the most shares were short at the lowest stock price. But then good news comes out and we see this trend, 23%, 21%, 20% short interest, 16, 15, all the way down to 15% short interest as of the end of 2019. 12/31/2019, we had 15% short interest, all the way down from a high 25% short interest. And then we look, and this is what a short squeeze is, guys. We look at the stock price at the end of May, when it was the highest on the short interest. That good news comes out, and those shorts are getting squeezed. We just see a very clear uptrend all the way up to 418.30 at the end of 12/31/2019. Well, now we're in 2020 and this thing has just gone crazy. All the way from 418 to a high of almost $500. And we actually do not have the short interest percentage because NASDAQ has not released that. They only release it twice a month, so it'll be out in a couple of days. but just don't have that data. It'll be really interesting to see though. I'm wondering if it's 15% still, or I'm really guessing it's probably more like 13 or something, because I mean, that's just a massive squeeze, it seems like. Probably a lot of shares being covered there, so pretty crazy stuff. Now guys, after looking at those graphs, you might be thinking, Tesla seems like a great stock to short. And I can see the argument, because we looked at the market cap compared to the competitors, Fiat Chrysler and General Motors. You take both of their market caps, combine them, and you're still not at Tesla's. Yet Tesla is selling a fraction of the amount of cars of either one of those companies. So yeah, there are definitely questions about the valuation. But would I recommend shorting it? Absolutely not, guys. Tesla has so much going for it. It is growing so quickly. I feel like I'm starting to see Teslas just everywhere. And the thing is, the market is not rational. The market does not always just see those numbers and implement them immediately. Over time, usually the market is rational, but short term, the market is run by people. People aren't rational. The market can be a lot of randomness, and you do not want to fall into shorting Tesla shares and just absolutely getting demolished. Well, congratulations, you made it to the end of the video. And as promised, near the beginning of the video, I said that I would share with you one invaluable tip that I actually had to learn the hard way. And what is that tip? That tip is never short a stock when the overall market is in an uptrend. I'll repeat that. Never short a stock when the market is in an overall uptrend. Why is that? Well, guys, the trend is your friend. It is easier just to follow the trend. You could find a doo-doo company, a horrible, horrible company, and this company could be horrible, but the thing is, if the market is going up, there's an uptrend, people don't care. The market is not rational because people run the market. And at the end of the day, people can keep buying a stock, traders, algorithms, whatever, will keep buying a stock even if it does not have good long-term prospects. Eventually, that stock will probably come down, but by that point, you might have gotten margin calls and had to cover your shares at some crazy high price. So just do yourself a favor. If the market is in an uptrend, don't lose your shorts. And above all, please smash that like button. I don't want to be annoying about it, but it really does help the algorithms of YouTube. It'll help me expand my channel. And I appreciate you guys watching so much. So have a great day.